Staying in Latin America, Brazil's economy expanded in the third quarter, growing 0.6%. Stephen Gibbs joins us live from Rio de Janeiro. So Stephen, was this figure on GDP growth expected?
Not really. The expectation here amongst the economists and indeed from the government was that the growth would be far higher, perhaps double the 0.6 of 1% that we heard today. The Reuters news agency spoke to 42 economists just 2 days ago, and their median prediction was about 1.2%. So a big disappointment really for Brazil and for the government. And you have to bear in mind this comes at the end of 13 months of aggressive action by the government to try and boost growth. They've reduced interest rates to historic lows. They've reduced them 10 times, and they're now half what they were 13 months ago. So quite a surprise that all that aggressive action isn't getting the results that were hoped for.
Stephen, I mean, it must be frustrating. I mean, a lot of experts have been talking about Brazil, how they're going to have a so-called a soft landing. All these initiatives that the country's trying to do is to stimulate the economy, and what you're saying that it's not working as of yet. What more needs to happen from the folks that you're talking to there on the ground?
Well, I think there are two problems here. One is the global problem. Brazil, as a BRICS country, perhaps was over-ambitious, over-hopeful that it could escape what's happening in the rest of the world. Clearly, all the BRICS countries have had a problem. Clearly, they've all been affected by this global slowdown. But also, specifically, Brazil, which is the slowest growing of all the BRICS countries, has some endemic problems. I was at a conference last week between Brazilian and Chinese businessmen, and they all had the same complaint, and that is that this country suffers from a lack of infrastructure spending, it suffers from a lack of skilled workforce, and that really they're reaping what's sowed because of that problem. What they're asking the government to do is perhaps the interest rates cuts process can't go on much more, but instead they need more investment, a simplified tax system, all those sort of things that take time. So the government says it is going to be able to sort this out, but what it's not happening is the progress at the speed that the government itself was predicting.
It must be frustrating. Thank you very much. And you're also helping us get started on a very important topic here. And we're now joined by Paulo Sotero, Director of the Wilson Center for Brazil Institute, here in the studio. Welcome again. You know, last time you were here, we talked about Brazil, we talked about Latin America, and there was a lot of talk of, at that time when we first talked, big investment banks were saying how growth was slowing. Brazil was saying how they were going to buck that trend by adding stimulus to the plan. And as we just heard in our last report, the plan so far is not working. Why, in your opinion?
It's not working because the stimulus have not been comprehensive enough. The government picked some sectors, elected some winners, lowered some taxes, but those ran out. What is needed now is a more aggressive, a more ambitious plan that creates a more inviting environment in Brazil for private investors to come in. The problem is that the private investors are sitting on their money. They are not sure about the environment where
let's explore that. The private investors, you're talking about big multinational firms and probably smaller companies as well, who are looking at Brazil to put money in and invest there. What needs to be done to entice them to invest, or is it something that Brazil perhaps can't control?
Brazil can control part of it, is to generalize a strategy that has started with lowering taxes in Brazil, lowering costs of doing business in Brazil, probably at this point also relaxing some labor laws and increasing immigration of qualified manpower. One of the bottlenecks in Brazil is that Brazil lacks qualified workers in the numbers that are necessary in certain sectors, especially in infrastructure, ports, airports, and other areas, the pre-salt, the oil. And so there is a series of, challenges that the president is very aware of those, but I think that has been a failure so far to combine measures, to be ambitious enough, and absolutely to send messages to the private sector that this is a place where you can come you can invest. There is a security about your investments. She just announced something about contracts in the oil sector that are reassuring, but there is an expectation that the government needs to really be aggressive and follow up on implementation of plans. This has been a major question.
Okay, let's just take a step back here and talk about the global economy and Latin America as a whole. There's been some positive news out of Asia that perhaps we're going to see a softer landing. Europe, I dare say, trying to solve itself. In the United States, things are okay. Not great, but okay. How does all this affect Latin America and perhaps specifically Brazil?
Well, it affects all the countries, obviously, a more difficult global environment, but some countries in the region are doing better than Brazil. So it shows you clearly that there are problems that Brazil has to face in its own economic environment to perform better, to become more attractive, to give guarantees to people that they will put their money in Brazil. Brazil remains attractive.
Let's get on the phone. Let's talk to President Rousseff.
Yes.
If you could advise on just two things to do right now for the Brazilian economy for the president, what would those two things be?
I think the most ambitious and most serious is a tax reform. She has started, but it's to move and to deepen that, and probably something that would take effect more immediately is to make it more flexible, the laws to allow qualified manpower from Europe, from Portugal, from Spain, from Italy to immigrate to Brazil and to take jobs there in sectors that are key for growth in infrastructure. Those are the bottlenecks, and we know that companies will not come without the guarantee that they will find the workers that they need in order to make the projects going.
If I'm an investor sitting in China or the United States, and I'm looking at Latin America, and we're going to put money into Latin America, tell me your top two favorite countries to put money in right now.
Well, Brazil, because Brazil continues
still Brazil.
it's still Brazil, because Brazil is just starting to develop, Brazil has the potential to go back to growth. President Dilma Rousseff has been talking about 4% a year.
We're going to have to continue this another time because we're out of time. Paulo Sotero, thank you very much from the Wilson Institute. Great to have you back on the show.
Thank you very much.